Welcome to Lunch Money. I'm your host, Nikema Bolware, Business Development Executive here at Guardian Credit Union. We are so excited that you all decided to join us for lunch today. For those that are tuning back in, thank you so much. And for those that, if this is your very first time, you're in for a treat. We have some really great guests today, part of our home loans team here at Guardian Credit Union. Now, those that are joining for the first time, we want you to know that Lunch Money is our goal for Lunch Money really is to connect your personal financial goals with realistic advice and relevant resources to truly help you reach your financial success. Now, we know financial success is different for every single person, which is why Lunch Money is bite-sized information just to get you started on your way. Now, let's go ahead and introduce our guest today.
Hi, I'm Gavin Caldwell. I've been in the home loans department since 2015, and one of the great things we get to do here at the credit union is just people helping people.
All right.
Hey, I'm Ashley. I've been with the credit union for 6 years, and one of my favorite things about being with the credit union is being able to help my members. Even if I'm not able to do something right now, I'm able to get a game plan together to help you get to that point.
Oh, that is awesome. And don't we love a game plan? Now, remember, we have a guide that's gonna allow you to connect with us and stay on track throughout our conversation today, throughout the episode. If you don't have that and you didn't print it, don't you dare worry. We're gonna go ahead and include that in the link. And also remember, because we have so much great bite-sized information I know we're gonna get today, go ahead and submit your questions, okay? So that you, when we get to our Q&A, we'll already have your questions and we can go ahead and get those answered for you. Now, also, I want you to know that this is a two-part series. This is just the first part of a two-part series we have right here with our home loans team. Now, let me share with you what we're going to be discussing on the menu. The first thing we're going to be talking about is planning for the home loan process. And then we're going to wrap it up with the 4 big drivers to get your mortgage. Ashley and Gavin, I think these are really great topics for us to discuss today. When I'm thinking about planning for the home loan process, I think anything that you do and you don't have a plan for it, I don't think you're looking for success, right? When I'm thinking about the planning process, what are some of those steps that go into that, Ashley?
So first, I would say you need to talk with your mortgage lender first. If you're thinking about it, you need to talk to us about it. And then, kind of how much house can you afford, and then, the time expectations.
Yeah. So when you said talk to your mortgage lender first, why is that such an important key?
Because we're able to help you get a game plan together, especially, to set real expectations and set you up for success.
Yeah, realistic expectations are huge when you're talking about a mortgage. Wouldn't you agree, Gavin?
Absolutely. Those expectations kind of can drive the whole thing. How much do you want to pay for a mortgage? What does your mortgage payment need to be? It's like we've said in the introductions, as people helping people, we do not want to put you in a house that you cannot afford.
Absolutely.
Because if we've done that, and then 6 months later you're struggling, we've done a disservice to you and your family. So we want to talk about that, how much that monthly payment needs to be. We need to talk about a general budget.
Okay.
What are your bills that are out there? What is this new payment going to add to that? And then, the affordability rule of thumb that we always like to talk about in mortgage is generally no more than 3 times your annual income.
And that's some really great information. Those are great tips. And you just hit it on the head. How much house you can afford was that second thing that Ashley mentioned. The idea when you're talking about the amount that you want to pay monthly, you just said that. What does that kind of mean? Kind of go into a little bit more detail with that one.
So with a mortgage, it's not just your payment and interest like it is an auto. You're going to have your county taxes that you got to take into account. You're going to have your monthly homeowner's insurance that you have to take into account. And then depending on the product type, it could be another fee called mortgage insurance.
Okay, absolutely. So having an idea of what that monthly amount is going to be is really great. I know one of the things that I've always been told is that you don't want to be house poor. When you got a big house and it looks lovely and it's nice and it sits pretty, but then every month you're like, oh my God, I'm making this huge payment. And again, when you mentioned having a general budget, you didn't put that into your budget. So really, really great tips here. The last point that you mentioned, Ashley, was time expectations. What does that actually mean?
So, just the reality of how long it takes. It's not something that's an overnight process. It's not like an auto, you get approved today and get your car tomorrow. It takes time because there's documentation required that we have to get and verification of several other things. So, it's just, knowing that it's not an overnight process.
So I would like an example of that. So the only reason I'm asking this is because I've gone through this process before, and shame on me, I had to get my hand slapped by my mortgage lender because I was slow in some of the things that I needed to do. So can you give me an example of what that time expectation and how we need to set that for the person that's walking in and interested in that mortgage?
So when we ask for a document, it's not because we want it, it's because we need it. So for us to be able to move forward and speed up your process, getting the documents that we request in a timely manner definitely helps with shortening the time frame.
And if I could speak to that for just a quick second, one thing that we like to do kind of on the front end when we're talking about planning for that process is we try to give people kind of hey, here's a general idea. We're going to need your pay stubs. We're going to need your W-2s. We're going to need your driver's license to get some of that preliminary stuff out of the way to try to help speed that process up.
Perfect. Well, I think that planning process, we've gone over some really great information here. Remember, if you have any questions about anything that we've discussed, go ahead and send your questions in the chat. We want to make sure we get them during our Q&A. Now, as we move forward, we're going to talk about the 4 big drivers that can get your mortgage. And one of the very first things that comes up is your credit. So talk to me a little bit about why credit is so important when you're talking about a mortgage.
So your credit score is going to drive that interest rate and what the max loan to value that we can loan against the property, which is going to determine your down payment.
So we want to make sure credit is where it needs to be. And I know that there are different factors with different types of home loans that you get that determine what that standard federal credit score needs to be. But we know that there are different options out there for different situations.
That's right. Obviously, the higher the credit score is, the better. But depending on what it is, as Ashley said, interest rate, that's going to be the first thing. Down payment's the second thing. But then it also depends on the product that we make and get you pre-approved for. Like I said, it's the number one driver. It's the first thing that they look at. It's not set in stone, obviously, here at Guardian. We're people helping people. It's not the number one driver for us, but it does affect that interest rate, which can also affect the affordability of the house that you can get into.
Absolutely. That's some really great information. Now, the second big driver for a mortgage, you getting your mortgage, is to set a down payment goal. And I think this has a lot of different moving parts on it. Why don't you guys go ahead and share with me why this is important?
The number one thing, I literally told my sister this morning because she's looking at buying a house. It's always better to have the money and not need it than to need it and not have it, especially when it becomes to a mortgage. Okay. But there's a lot of different products out there, and we can talk through those when we talk to you. But it is always better to have the funds available, have them saved if we can.
And so when you mention having the funds available, what specific funds are you talking about?
So your down payment funds, they need to be in an account and have a paper trail.
And why is that paper trail so important, Ashley?
Because it needs to show where the funds have come from. We can't just deposit cash in there today and say, oh, I have my down payment for closing next week.
Right. You want to make sure that down payment money is available right away and not saying it's going to come, because we never know when things come, right? And there are different options for your down payment and different paper trails. I know specifically if you are being gifted down payment money.
That's right. And that's a little bit different process. Depending on the loan type, you're going to get a gift letter for those funds. But like I said, it just kind of ties into the whole picture. The good thing about a down payment is skin in the game, so to speak. Okay. It's, hey, you're buying this house. You're putting your, so to speak, blood, sweat, and tears into this house as well, so you're going to fight to keep it. So
that's right.
It's one of the things that's why it's generally the second biggest drivers that you got skin in the game, so to speak, going into this. And it's a big purchase. This is not an auto loan of 2 to 3 years. This is potentially a long-term asset, that goes into your net income.
Absolutely. So, when talking about our next driver, our third driver is checking on your debt. Why is your debt so important when you're talking about a mortgage?
Because that's your monthly payments that you have to pay out compared to your income that you have coming in. Like we said earlier, you don't want to be house poor. You don't want to have a payment that's more than what you're actually comfortable with, and then 6 months later you're struggling because you can't make your payment.
Right. You want to make sure that it's where it needs to be. And when talking through that debt, I know you mentioned and setting that general budget. It was so very important to do that. And I think that's where it falls in to that DTI. Does your debt to income have any other factors in that mortgage process?
Yes. General rule of thumb is, I know we've talked about this before on the affordability rule, but personal finance rule is 28-36.
Okay.
That 28% needs to be your housing expense ratio, and you really don't want to go above that. And then 36% is your total debt to income. Like I said, that's not set in stone, but that's a good rule of thumb to kind of live by.
Well, DTI is definitely very important piece of the a huge driver to getting your mortgage. Now, we're going to wrap it up with our fourth big driver is why your work history matters. So, talk to me about why work history matters.
The reason why work history matters is because, when you start a job, they're not going to be paying you like top dollar income. So over time that pay does increase, so it allows for a higher monthly payment. You don't want a lot of frequent job change just because it's not showing stability.
And stability is huge piece because again, like Gavin you mentioned, this is not like a quick loan. This is something that is going to be sometimes almost a lifelong purchase that you're going to make. This is an investment into your family and your future. So you want to make sure that that longevity piece is a part of knowing that you're going to be able to continue to make this payment.
That's right. It's a stable and secure job, so to speak. Number one thing when you're going through the mortgage process with the work history, especially when you're dealing with some types of loans, they want to do your verification of employment. Mm-hmm. So we're going to be talking to those jobs, getting all that income. So if you've got 6 jobs in the last 1 year, we've got to get in touch with all 6 of those jobs. Okay. So kind of to Ashley's point, it's not the number one thing, but it's just kind of a piece of the pie.
Just making sure you got some security. We want to make sure we're giving you this large amount of money for this beautiful home, but we want to make sure that you can afford it and that you have the reasonable means available to you to continue to do that. Well, I think this has been some great information. Again, we're almost down to our Q&A, so please make sure if you have any questions about anything that's been said, you go ahead and shoot those to the chat so that we can make sure we answer those questions specifically for you. Now, before we wrap up, I know this is just the first part of a 2-part series, so we'll be back with some more detailed information, but why don't both of you share with me one thing that you say is for you is very important through this process with the information that we've discussed today. Pick one thing that you think yourself is super important with the mortgage home loans.
If you're thinking about a mortgage, you need to talk to us.
For me, it would be, let's look at your credit score.
Okay.
And this is in our Guardian DNA, so to speak, even on the consumer side. But as Ashley said, if it's going to be a little bit of time on the mortgage, well, let's see what we can do on the credit score today that's going to help us get approved 6 months from now.
Perfect. Well, thank you so much. Let's go ahead and jump into our Q&A and start answering some of these great questions we already have submitted.
So one of the very first questions, this is a really good one. I recently got married and now there are 2 homes. My husband is renting his home out and we are selling the home that we're in now. We want to buy a home together. How will the rental property affect the next home we buy?
So you can definitely use that money that you have coming in on that rental property as income. You may have to provide proof, like you may need like your rental agreement, and you may also have to provide the last 12 months of proof of them making that payment on that monthly rent.
Oh, perfect. So there is a possibility. It seemed a little complex. You got a house, you had a house, each person had a home, you got married, renting one, selling another one, want to buy a new one. So it is possible, okay? Another question that came in as well, this is also a good one, and we see this often. I've been in bankruptcy, and I just got out a few months ago. Will that hurt me because I am trying to build a home? I have my own land and a plan, and I plan on building. What does that look like for this individual?
It depends on the product that we choose, and
Okay.
it depends on the bankruptcy that they went through. Did they go through a Chapter 13 bankruptcy? Did they go through a Chapter 7 bankruptcy? But the biggest thing that it did, it just made it a longer process.
Okay.
Because typically there's a waiting period when they come out of bankruptcy. It could be 2 years, could be 3 years. In some instances, it could be longer than that. But the
Okay.
biggest rule of thumb that I would tell them, save as much money as you can and try to pay off the land if it's not already paid off.
Okay, great tip, Gavin. Save as much as you possibly can and pay off that land if it's not already paid off. Another question that we have coming in is, what is a safe down payment amount that I should have saved when I'm thinking about purchasing a home?
So it really just depends on the product that we're able to utilize for you, because it can be anywhere from 3 to 20% down.
Okay, and it just, and again, that goes into the types of products that you fall into, right?
Yes.
Okay, we have another question out here. Thank you so much for submitting your questions. I'm thinking about building. What does that look like for me? I know that's a loaded question,
It is.
but help us as
That's
much
right.
as you can dissect that one.
It is. Again, it depends on the situation. I say that a good bit to make fun of me in the department, but
It's a loaded question.
it is. You know, do you have family land? Are you buying the land? Are you going to build on it? We just really want to break that whole process down, kind of how we started off this meeting. If you're thinking about it, we need to talk about it, because if you're buying in a neighborhood, it can look very different, or if you're building in a neighborhood, it's going to look very different than if you're building, say, out in the county on family land. So we want to talk through that. Do we need to get the land deeded to you? And just kind of let you know what that looks like and how we go about approaching that whole situation.
Perfect. Another question that we have coming in is specifically about student loans and how they affect my credit when thinking about purchasing a home. That's basically the question. It's saying, how will my student loans affect my purchasing power?
It's a very good question. We actually deal with that on most any home that we're looking at now. The biggest thing is it depends on the product that we're looking at.
Okay.
If we're doing an FHA loan, which is a government loan, a federal housing loan, so to speak, the investor we go through, they take 1% of your outstanding balance.
Okay.
So if you've got $50,000 out there, they're going to count that as a $500 payment, which is going to go into your debt to income, is going to go into your purchasing power. Some people are on income-based repayment plans.
Right.
So if we're going, and I know it gets a little bit gray, but if we're doing a different type of loan, a conventional loan, sometimes we can use that zero payment that they're making or that very minimum payment to help them to be able to afford more. But we would definitely want to connect with them to talk through the different products that are out there for that.
Absolutely. We want to make sure that y'all know that Ashley and Gavin are available to you to be able to answer and go and dive a little bit deeper, specifically when it comes to the student loans. And because we haven't gotten to our second part of our two-part series on home loans, where we do break down and give a better understanding of what different solutions that are available to you when you're talking about purchasing a home. It looks like we have one more question that's on here. It says, how important, when you're talking about how important the down payment funds are, can you explain why it's important to have, why it's important to see where the gift is coming from? The gift money. I think they're trying to ask, if I have money that's being gifted to me, why do you need to see where those funds are coming from?
So, like we said, we need that paper trail. As far as like the gift though, like you're going to also go through the process of, having a gift letter done stating, you're not having to pay that family member back, as well as they may also require their bank statements to make sure they didn't go out and get a loan for this money. So it's all about the paper trail.
Okay. And the biggest point there is, are they getting it from somebody to pay it back, to go into the debt to income? That's the biggest driver for that reason.
Yeah, and I think it's really important that if you have any questions specifically about these down payments, give Gavin and Ashley a call. I think it's important to connect with us. These are some really great questions, and we want to make sure we respect your time, so that we are going to go ahead and pull our winner for this episode. Drum roll, come on, give us a drum roll. We got a winner. We're going to be giving you lunch. And that winner is Miss Ella Parker. Ella, you are the winner today. Thank you so much for joining us for Lunch Money. We'll be reaching out to you so that we can get you the information that you need in order for us to provide lunch for you. Now, again, we truly appreciate you connecting with us today and being a part of Lunch Money. We want to make sure that you know that this is just the first part of a 2-part series, and our second part of our series, where we'll be coming back with our home loan specialist, we'll be discussing in more detail what products and solutions we have available to you when you're talking about a loan. Now, Ashley and Gavin, I want to give you a couple minutes where you can go ahead and if you want to share how they can contact you, or any last minute advice or tips that you'd like to give.
So I just like to say, if you're thinking about it, let's talk about it, just so we can get that game plan together for you and help you through this process.
And I just kind of piggyback off that. Just let us know. We'd be glad to talk through it, even if it's not now, even if it's a year from now. I had a conversation last week. Someone's looking at next year this time.
Yeah.
We just want to talk to you. So I know, call us, email us, just get in touch with us. Absolutely.
All right. Well, we are looking forward to connecting with you again. And until next time, have a wonderful afternoon, and we'll see you soon.